The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour. Anyway, as we go through this day, the boom bust cycle is not new, let's put it that way. And of course, in the lead up to the huge blow-off top in 1929, radio stocks, technology stocks led the way, and it doesn't seem to be too much different these days. In 1986, of course, Microsoft went public one day after Oracle. Microsoft closed the day at $28 after coming out at a price of $21. So I think we try to think, whatever our history is. I started trading in 1995, late 95, early 96, and we kind of all think that nothing happened before we showed up, but it's always one of those things where, especially in the markets, nothing is truly new or different, but it is what it is. Of course, we were talking about light volume. I had about 350 million shares for the first 30 minutes as they tried to push this market up. I would be looking for 500 to 600 million shares to give some kind of indication that anybody was truly stepping in. Another good indication that there just isn't a lot. Every time you push this market up, there wasn't a lot of buying. They pushed it down, and there wasn't a lot of selling either. And this is not uncommon when we have highs. In fact, I was going back through Jesse Livermore's books and writings a little while ago, overnight and this morning. And it is, there was a part that I was looking for. I still couldn't find it, about when he was in the market. I think it was 1908 or 1910 or something like that. And I don't know if it's in that book or in some of the other writings I got, but he talks about just being able to tell just about when selling is just a little bit more than buying, and normally you either have a lot more sellers or a lot more buyers. But his indication, as I remember from the writings, was all about why markets where the buying and selling, and you do get a top, tend to be pretty vicious to the downside over time. Is it's so much easier for the public to come in at a top if you can hang it out there for a while. If it only lasts a day, then you can only sell to them for a day. But as they say on the street, every ass needs a seat, and or every seat needs an ass. I say it both ways, I guess. But it is basically distribution that I was and have been looking at, and we'll continue to talk about that a little bit. Okay. So, what else do we have going on? Right after the open, a little bit of the open, it is, and we kind of had a dead calm. And one of the things that scared me the most was us just going sideways with no volume before this market cracked. The reason why is there's an old saying, and that saying is true: don't be short a quiet market, because normally about 80% of the time it will go against you. And to tell you the truth, I had to go walk the dogs around the block twice before I came back in and settled down before I would probably do the wrong thing and cover my shorts. And, of course, now it looks a lot better. But a lot of times, and especially for me, I don't know if it's everybody else, but the more self-doubt I have, generally the better the position I have. When I have no self-doubt, that's normally when the market comes back up and just clubs me like a baby seal. Anyway, when we look at what the euro did, FTSE was off 1%. DAX, again, what I look at is most of euro, off about 2%, France 1%, Spain off 1%, Portugal 2.2%. So pretty much a rout over there in Euroland. Again, part of that is a little bit of discussions about England leaving the EU, and George Soros and a big tizzy about it over the last few days. I think people are actually starting to pay a little bit of attention to it. Japan's Nikkei basically closed flat. Hong Kong's Hang Seng was off 0.7, and Shanghai composite up was about 1.1, and it's back to about the 2000 level. India, which I don't cover a lot, mostly because it's been going sideways for a while after the drumming it got, is starting to slide a little bit. Saw an early test of the all-time highs, but it was unable to hold on to its gains. And Infosys, which we'll talk about in a little bit, of course, over the last day and a half, down about 8.5%. Okay, and we've got some questions in the den we'll get to fairly quickly. I did want to bring up a few things. One is a few quotes from Jesse Livermore, the patron saint of trading. And you really have to do this, because I got several emails of people saying that they wanted to take some short money. They had some profits, and for the most part, if this was any other stock, and I won't bring up the specific one, but this is one that I went from 60 to 100 on the last cycle. Everybody wants to, I can make 10, 15, 20% on it. But 60 to $100 is, a lot more than that. And I only trade this one when I'm hunting elephants, not when I'm hunting squirrels and small varmints. There's a few times in your life that it's going to be worth trading that, and I was looking at doing that yet again. And I think that there's a good chance that I can get at least that, if not a bigger profit this time. And one of the problems is it's just too easy to let your emotions rule you, especially when big money is there. And Jesse had this. He said the successful trader has to fight these two deep-seated instincts. He has to reverse what you might call his natural impulses. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear his losses may develop into a much bigger loss. And he must hope that his profit may become a much bigger profit. And right now I'm looking at a lot of hope that my big, pretty decent profit gets a little bit bigger out here. But the first time we went and did this trade, probably a lot easier than it will be this time. But I have a feeling that we'll make even more money this time if I can just sit on my hands long enough. And, of course, he also said it's no trick to be right on the market. I've known many men who were right exactly at the right time and began buying or selling stocks at exactly the right time. And their experience invariably matched mine. That is, they made no real money out of it. They were trading fluctuations. They were not trading the long-term trend. And I have a feeling that the big money is going to be in this trend and not trying to get every little ABC on the way down. I tend to, like I did last time, wait for complete demoralization. I want to see everybody start saying that this market's headed down. And we'll talk a little bit more about that. Just pour sulfuric acid on your keyboard. Maybe throw the whole computer down the street. In fact, Jesse Livermore said one of the best traders he ever knew was a guy that would come down off a mountain in Colorado once a month, get the newspaper with all the quotes in it, look at it, do all his buys and sells, and go back up to the top of a mountain. That he was he was so averse to being anywhere close to the market that he had to go climb up on a mountain. But he said that guy made more money than most anybody he had met. I'd seen this starting to roll around on Monday. Jeff Grunlich came out and did a webinar on Tuesday, and this has pretty much reached a viral level in the financial internet. But it is a chart with the numbers that came out on Monday for New York Stock Exchange margin debt, showing the absolutely huge margin debt on it. It is not as big as the S&P 500, but of course you have 2,700 stocks, 2,750 actual active stocks, I think. There's still some stocks with no volume or little volume on the NYSE. I think maybe some of those are ETFs. But probably the most interesting part of this to me is that when we look at the last two moves off the top, it's been a wide market. When we go back and look at 2007 into 2008, when people get out of the S&P 500 and start margining a lot of stocks out of those standard 500, and we start seeing the kind of blow-off moves that we've seen in things like Plug Power and some of those other ones over the last few days, it is margin in these extremely weaker stocks, ones that probably should be margined less, that are generally a good indication that it's going to be very hard to get the market to move any higher because all the money's in and even all the margin's in, which normally connotes that you have a much larger pullback as that margin is pulled out. So just one thing to think about out there. In the newsletter this morning, I did put in my options expiration curve. It's showing that the most likely expiration would be around 181 on the S&P cash. And when I was looking at this last night and going through it, I saw something a little bizarre. We'll get to it. We'll get to questions in the den. We'll get to all of it in just a minute. You can give me a call at 877-927-6648. You can email me at path@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, I have a chart just because I wanted to bring it up, just because there's so much disinformation when you watch some shows like Bloomberg or especially CNBC. I actually record it and fast forward through it and just watch the closed captioning on it so I don't get too affected by what's said. In fact, during the political, especially the presidential elections, the press decided that they were replaying the same ads over and over again, basically giving free advertising to some candidates, not to others. And they decided to take and put it in a TV and turn it kind of sideways and turn the volume down to at least mitigate the free advertising they were getting. And also, especially when ads like Dukakis came out of the top of the tank with the Bullwinkle hat on. It was one of those things where they just kept running it in the media, and you got a lot of mileage out of it. The press thought that they shouldn't be involved in that, which they would today. But anyway, it is what it is. But I saw a lot of blaming Dr. Doom out here today. And the market started rolling off a good 30, 45 minutes before he ever came on. But because it accelerated while they were on the air, they started blaming Dr. Doom for coming on there and saying that there could be a problem. Now, he's been on there 5 times in the last year saying that there could be a problem. The whole thing of placing blame or a issue of doing it is problematic at best. There is no alternate history where he didn't come on the show and the market did the exact same thing. And one of the charts I love to show is this global average temperature and the number of pirates. As the number of pirates has gone down, the global average temperature has gone up over the last 200 years. Not that much, and of course, I have no idea. What I'd like is the previous 10,000 years, just how much it changed, how much it went up and went down. So I find statistical numbers already. But the whole idea that a pirate could change the global temperature, we know is patently absurd. Unfortunately, not all the time do these things come out and look as blatant as this, and we ascribe causes where they don't actually exist. In this case, I found out that about the exact same time where the market started to roll, a New York Times story came out showing that Russian troops were amassing along the Crimea and Ukrainian border. To me, what is the more likely cause of a market turning south because of a news event Is it because one guy said the market's headed down, or is it Russian troops on the border? And that is the danger of listening to financial infotainment too much, mostly because most of them aren't putting their money at risk. In this case, some of the people were and weren't. What I could tell you, though, was I saw endless amounts of cheerleading between 11 and 1, and my guess is that they'll be cheerleading for several days to come. We'll try to get into a lot of the other stuff happening today. Got a lot of people looking at stuff already, and what do we do? Looking at natural gas. Someone had a question for it. It's down here at the lows. My guess is that they're just going to sell everything off, and especially with crude rolling over, markets rolling over, I have a feeling people are going to get cash where they can get it. Even gold, although I think gold is going to hold up incredibly more and better than just about everything else. And it is a mad, mad, mad market. So I had a question on the Qs, QQQ, and Scott says he's got puts expiring tomorrow, and I'm not a fan of playing anything close to 1 week options, but I know some people do. And one thing I dislike about this is you're just now getting back up against the resistance level on January 22nd, and I'd like to see some more volume out here. If you could make money and you have on the weeklies, then I'd probably roll them over and go 2 or 3 months out. I think this is going to last 60 or 90 days, and we're going to get into UNG here and some other stuff. Oh, yes, I think that would be an interesting play, Peak D. We'll be back to talk about that too. Be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we had a question in the den from Peak D. We had a nice Gartley show up in the scan. I'd been watching this for Greece, and I have a feeling, I guess the question is, should we be short this? They have a feeling already that if you're not short it now, that pretty much it's left the station. This thing doesn't have a lot of volume, which is the big problem, but I have a feeling with all the things going on in Europe, and especially the discussions about England leaving the EU, I have a feeling probably already missed it, but the thought would be that, of course, without England in there, the chances of Greece getting a lot more cash so that they could all lay around and talk about how wonderful socialism is probably not going to go too far. I would certainly, at every opportunity, be short Greece until you see some kind of at least belief that the EU is going to stick together. My guess is if the EU blows up, of course, there's not going to be anybody wanting to shovel a bunch of money to people that only want to work 20 hours, if that, a week. So it's problematic at best. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And we're going to go through some stocks that we went through Tuesday night in the webinar just to see how some of these things are working out here and clean that up a little bit. One of the things we brought up in the Tuesday webinar was just how weak a lot of the stocks were in the financial sector. I know people were screaming about buying financials on the pullback, buying financials today. In fact, I was almost my stomach, I almost threw up in my mouth a little bit watching these guys rabidly call for buying, like there's never ever a pullback in anything. I hope I never get that much that I feel like I'm pounding on the table that you must buy something. Like I said before, anytime I scream buy or sell, probably not a good time to buy or sell. If I'm a little nervous, probably a good time to buy or sell. That seems to be kind of the trick. If it's that apparent that everybody should sell, then probably it's a false signal. In fact, the most money I've ever made has been on signals that have been not easy to live through, especially the tops and or the bottom. When it's absolutely the hardest thing to do is normally the right time to do it in the market, either short or long. Anyway, I was looking at American Express, and of course, pretty good indication this is doing exactly what we thought it should, which is you had a high out here with about 15 million shares. It came back down on light volume. It went back up I mean, it came down on decent volume, came back up on a lighter volume, a good 25% less energy shown by my power law vector indicator number. And then, 15 million, and you get a little less than 4 million shares. This thing closed back below it. That is the valid sell signal on it. And, of course, today you get the reversal out of it. There really isn't a lot of volume moves back down until about $82 on American Express. And I think this is probably the stocks we want to be looking at to confirm we've hit a high. Bank of America, kind of the same thing. Not a lot of energy coming back in. And if I have a feeling that we are going to be pulling back for a while, that the real energy is probably not going to come into this market until we close below 1,800 on the S&P and actually get all those people that believe they should buy every dip to come out and start saying it's time maybe to start taking some money. So I'm not expecting a lot of volume off this top to begin with. I'm looking for it to be tough to be for where be a little bit wild. Anyway, have a nice move out here. Let's see, I don't have any questions in the den. And since this is a fast-moving market, let me see what we have out here. Just a shade less than 20 points with 2.4 billion. So volume is starting to pick up just a little as we go through the show, but still not a whole deal yet. Now, I was talking about the options, and we did show the chart. I want to show you a few other things. And that was we saw a huge move in options. People were buying massive amounts of lower protection in the SPYs yesterday as they went delta neutral for expiration. And I thought that was very, very interesting. They are looking and thinking that where they need to be worried about is anything less than 181 on the SPYs. Actually, they'll start making money, as it goes down. But it is a problematic that could probably see close to 1,800 during this expiration cycle. I would be surprised to get down to 1,800 and pop back up to 1,820 or something for expiration. I think it's going to be a battle. I didn't go all in on options for the cycle for the reason I thought it was going to be problematic. It was going to take a while to boil all these longs that believe that the market can only go up, and it is going to continue to be problematic. But what I did see, which was a little different in the options, was stocks like IBM and stocks like Apple, where these guys are trying to build the Great Wall of China to see if they can't keep these stocks from going down very far. And I didn't look and see what Apple was IBM was trading at. I know Apple was weaker earlier, but we're looking about 183 on IBM. It's trading out at 184 right now. Apple, I'll bring that up real quick. And of course, this is data from yesterday. So if you're watching on Tiger TV, so this is about 540. My guess is they're going to try to hold up some of these bigger stocks into expiration. So you may have to hold these things a little bit longer. But I've had a lot of stocks that I'm short now starting to roll over. And it's going to be interesting to see how the day plays out. My guess is that this is going to be a scorched earth pullback, in which case they're going to try to buy every move down. It's going to be very hard to remain short. But there's going to be that aha moment where everybody says, well, maybe I should start shorting. And that is going to be problematic. Of course, gold, pretty flat out here. But as we look at these options, they're basically telling me that they think that they can hold a lot of these bigger stocks up, but they're buying a ton of downside protection in the SPYs. So just a thought out there. But one of the things that was good when I was looking at this market last night and this morning, watching those futures try to push back up, BBT is another one we covered in the Tuesday night webinar. This thing got just a penny over the last previous high, but 5.7 million shares to 3.9. Starting to see some volume. Of course, the day's not over yet. We've got about 2.7 million shares right now, but I think we've got at least a movement in most of these financial stocks back to around the February 4th lows. In the case of BBT, this would take you back to $36.28. And you got a nice little down volume day with 4.3 million shares the day before of that absolute low. And I think that's probably where you're going to be heading right back down into that mid 36 to lower 36 level at least in this financial. One of the other, in fact, I've got more of these that showed up a few days later. But we saw a lot of these bank stocks, and this one was probably the most egregious. East West Bank Corp. This thing's pretty much given a nice little signal, but no volume quite yet. But just no volume on the way back up other than the first day, and decent volume down to 31.62. So when we look at the ETF, everybody's been pumping this again for the last few days. We are getting a confirmation on a sell signal on the financial ETF today, and you did have a little bit of volume in this, and I don't know if it's just running the shorts that got the volume up, but the energy backup was off maybe 20-15%. So this one's a little closer, but what you didn't have is all the stocks that are in this, for the most part, were breaking their highs on lighter volume. So this is where the ETF not agreeing with the stocks inside of it. Another one we showed Tuesday night was KLAC. And if you missed that webinar, there were some reasons why we didn't want to short this thing. But I think it's giving the confirmation today that it's had a high. But I didn't like this energy on this last leg up. A little stronger, but I don't think this is going to pull back as strong as some of the others. We've been looking at the markets also. The NASDAQ OMX group in DAQ hit this, we had about 300 million shares short from the first high, or 400 million from the January 9th high. Either one of these, a pretty good indication. This fell off fairly quickly last few days, and we're back at least into the gap where this thing gapped up with no volume. But I suspect we're probably looking back at 36, 37 on it. And what else do we have out here? UTX. UTX was another one that had a very good signal up at the top, and that was heavy volume down in the last leg from January 22nd to February 5th. Lighter volume back up, and of course a test of the top on lighter volume. We're actually starting to see some acceleration in some of these stocks later in the day. Today, where we're going to start seeing volume pick back up, but pretty good indication that UTX is headed back down, at least to probably this previous low of February 5th at 107, but probably going to start seeing at least a little bit of support maybe in the next couple of bucks down, and that's probably where we're going to see this market slowly sell off, I suspect, into expiration next Friday, but we'll look at that. I got some stuff here, so we will look at this fairly quickly. Where are my drops? Those are my drops. Do I have something in here? No. Hang on just one second. There it is. So we've got it.
You've got mail.
You've got mail, baby, yeah. I got mail, yay! I got mail, yay!
Well, I do have mail, and we have some requests. David says KMP. Take a quick look at that, KMP. Kinder Morgan Energy would be a buy or not? Well, certainly not on a short-term scale. Let's go back 3 years and see. To tell you the truth, I'm not a big fan of buying energy here. I think crude's coming back to the low 80s, and maybe Andy will have a little bit more in the next hour to talk about it. I haven't been able to look at it. I mean, this thing's probably closer to a low than anything else. I do not like the high volume that we've seen just in the last time. This came down on heavy volume the 24th. It's back into that today with lighter volume, which means this thing's probably going to go sideways. But this thing has got a ton of destruction in it, and I don't think that's going to be solved anytime soon. This may take another 30 or 60 to 90 days to base out at 72, and if it does, maybe it would be a buy then. But my guess is this is not going to be one of these stocks that just turns around on a dime and starts moving higher. And that was for David and Susan. Okay. And okay. And okay. Got a question on EUO. I was actually short this at like $17 or $17.10 or something. I didn't like the way it was moving, and decided to go ahead and pull out of this one fairly quickly. I think I sold it for 15-cent loss or something like that, 10-cent loss. This thing is having a little bit of movement out here. When we look at the actual dollar index, though, it's up almost nothing. And that would be the problem I would have in this, is that I would like to see all the currencies probably move with it. Certainly a great move out here. Certainly you got a little energy. But I don't like the fact that the dollar index really isn't confirming the move. And just the dollar versus the euro may be a lot more about that issue of England or the UK leaving the Eurozone. But certainly a big move out there, at least in this currency pair. But, you know, you could be back in it, but I like this thing to settle out a few more days before I would pick a position in it. So we will take a look at that. And let's see what else. Anything? Jim Cramer sound effects? No, these are all drops. Different than sound effects. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, I don't know what's happened in the control studio, but they're probably smoking dope in there once again. Either that or sniffing glue. And you just really never know. But what can you say? It is problematic what those guys are doing. They say they're high on life. I suspect that there's a little bit more to say about that.
What are you people? On dope?
I think so. Anyway, you had a good question in the den, and I probably want to bring this up. When we were doing Art of Timing the Trade charts, we had a monstrous discussion about what makes a Gartley. And it is not written in stone anywhere. But since I go through all the Gartleys before they go out every night at 8 p.m., at least if you've got a subscription to the Art of Timing the Trade charts, I find the ones that I like. And unfortunately, it's probably a little too difficult to ever put a micrometer on it. But we've got two camps. We've got the Steve and Larry camp about very loose interpretations of what makes a Gartley, and more of the Dave White and Tom O'Brien camps, where we like a much more narrow definition of what makes a Gartley. And we were looking at the FXE. One of the things and one of the reasons I wouldn't put this in the scan at night for people looking would be I don't like a retracement. In this case, went almost back up to the X point. If it goes anything more than about 85%, I don't like it. I want to see some weakness in that move off the bottom. It also helps with setting up the risk reward. Since Larry tends to be a lot more in commodities where they have a lot more movement, probably why he likes these smaller ones, doesn't have such a strict requirement. When we put them into actual stocks, I have a feeling that you're better off having these things much more at the ideal, like I show in the videos on TFNN. If you need a link to those videos, you can always email me at path@tfnn. But just in studying and looking at them, and as far as I know, we're the only people that actually have any kind of automated system for looking for Gartleys, I was able to go through I've probably gone through 5,000 of them now, which may make me the most or the biggest authority on Gartley patterns, just because I'm the only one that can go through and find enough of these. But we had a huge argument about, and I'm not being argumentative, just a real argument about how we would know what a Gartley was and what it was and what it wasn't. And we send a lot of charts back and forth between Larry, Steve, and Tom, and what we liked from experience. And I think there's just two camps in here. To me, I would not say that I would like this as a Gartley. I would like it as a test of a previous high. You had two of them out here, one with 1.2 million shares, one with 910,000 shares. This thing broke above it yesterday with 238,000 shares, rotated back down on 664,000 shares today. To me, that's just a test of the top. And without a little bit more of the lightning bolt pattern and the A to B retracing 98%, if this thing would have retraced 70%, I think you would have had a little bit better pattern out here. More of a coincidence, I think, than anything else. Anyway, we've got our friend stalker Andy coming up right behind me here now, and just reminding you to sell when you can, not when you have to. We'll see you here at the same time, same back channel tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.